Crypto tends to go down right now. The question though is, where is the potential bottom? In this video, we're going to look at data most people aren't considering. We're going to look at reference prices, on-chain analytics, etc. Let's try to figure out where this is all headed. What we've got over here is the trading volume based on the Bitcoin price level. In other words, there was a lot of trading in the range between December 2024 and the end of February 2025. Especially in the last weeks, a lot of trading activity happened, and then we initiated our decline. And it seems like recently, since there wasn't a lot of trading action in the 70 to 90k range in November of last year, they were going through that trading range relatively quickly again, because there's no real support. Now, why does this matter? It's very hard to measure the fair value of Bitcoin, right? Should it be $10,000 or $100,000 or 1 million? Nobody knows, but everybody has their reference price. So you've got your price at what point you bought Bitcoin or you bought your altcoin for, right? And the coming prices that come after that are always in relation to the entry price. If you're currently in the negatives, if you're down on Bitcoin, for example, but you do believe in Bitcoin long term, then you might simply just continue holding or potentially even buying more and then wait for the recovery. But if you're already in profit, you might consider selling some of that profit and maybe allocate this towards other asset classes or potentially even just consume those profits. And so looking at that reference price for the market in general does make a lot of sense. And when very few people have the 70 to 90k range as a reference price, it's unlikely that the current momentum turns around during such a drop. And it looks like most people intuitively understand this, because we've seen a very weak accumulation during that price decline. Very few people bought this dip. Now, besides the reference price, right, your purchase price versus the current market price, it's also important to look at momentum, because let's say you are already in profit and you might take that profit. If week after week we continue to see higher prices in Bitcoin, you might still not sell. You might consider selling though when the price appreciation slows down. Now, an interesting measure for the current momentum is to look at the very short-term traders. How much are the very short-term traders currently in profit or in losses? If the short-term traders, the tourists, they are in losses, they might exit the market and this might start a bear market. That's how I interpret this chart here. So we've got the Bitcoin price since its rally from 16k to above 100k, and we've got two average cost bases here. The first one in orange is for the wallets between 1 week to 1 month. So those are pretty active traders. And then we've got the somewhat less active traders that held Bitcoin between 1 month to 3 months. We see how the red line is a bit more laggy than the orange line. And when the orange line is still above the red line, we tend to still continue to go up in the price. Once the short-term holders start to get in losses and the medium-term holders are still in an okay state, momentum tends to slow down. And unfortunately, we have seen that crossing once at the beginning of January of this year and now recently again at the beginning of March. Now, since the short-term holders are now in losses, is their selling pressure exhausted? Are they still continuing to sell, pushing the price further down? Here's the on-chain metric that answers this question. It shows the realized gains and losses, and whenever this peaks, the current rally might turn around. Whenever this bottoms, the current correction might turn around. Currently, we are at very similar levels to August of 2024. So are we bottoming here? There is one metric that makes me doubt this, and that's the coin days destroyed of the short-term holders. So the short-term holders capitulate when they realize profit at a very quick rate. So when this red line peaks down, this is peak capitulation. Now, what are coin days destroyed? Let's say you've got 10 Bitcoin and you move this every day. Then every day you're destroying 10 coin days. If you've got 100 Bitcoin and you don't move them for 10 days, and after 10 days you move them, then you're destroying 1,000 coin days. So the longer you hold your Bitcoin and the more Bitcoin you have, the more you're destroying that Bitcoin once you start moving it. And so when the wallets among the short-term holders that tend to not trade that actively suddenly start trading, that's potentially capitulation. And we haven't really seen that much of a wick recently. It really seems like 70k is where the potential turnaround might happen. Yes, the market overall is already pretty risk off. So this is the stable coin dominance. How much of all of crypto is currently in stables? It's currently at 7.8%. And we are somewhat in a trading range between 8.5% and 5% in the last 1.5 years. So we are somewhat at the upper end. But again, there has not yet been any kind of shocker event where the market got some kind of cleansing. Another way to look at this is to check the short-term holder cost basis with some kind of a buffer zone. So some kind of buffer bands. Whenever the short-term holders sell very, very quickly, we reach the lower band. Whenever they accumulate very quickly, we reach the upper band. So we get somewhat of a range whenever sell pressure is exhausted or whenever buy pressure is exhausted. And here's the chart. Isn't that interesting? We've got the short-term holder realized price in blue. We've got the Bitcoin price in black. We've got a potential bottom when sell pressure might be exhausted, which we hit in August of 2024. And we've got a higher band where a rally might stop. That's when we hit the red band over here in March of 2024. And then we almost hit it in November of 2024. The lower band is currently at 71.3k. So again, a very similar picture. We might not see that much more short-term demand in the near future. Now that's just the data, how I interpret this. I'm currently betting on falling prices. So I'm not buying the dip. I'm betting on falling prices of Bitcoin, but also of various altcoins. Because that's how I fundamentally see this, right? Most altcoins underperform Bitcoin most of the time. If you look at the top 100 cryptocurrencies in the last year, 80% of them did worse than Bitcoin. And that happened while Bitcoin itself actually went up, right? It appreciated by roughly 15% in the last year. So I'm a friend of playing games where the odds are in our favor, not against us, right? I don't like to gamble in a casino and I don't like to play the lottery. I like to bet on falling altcoin prices because most altcoins tend to do worse than Bitcoin because obviously there's token inflation, there is vesting unlocks by the teams, there's all of that selling pressure, and that selling pressure rarely gets beaten by demand of the market, right? It happens sometimes, but rarely. And so it's easier actually to make money when the market is going down than it is when the market is going up. Most people simply just don't know how to make money when the market is going down, how to bet properly on falling prices without getting liquidated, without taking on too much risk. Clearly, the overall situation in crypto has changed recently, and there seems to be one event that started it all off. What we've got over here is the Bitcoin price, and this red circle marks when Donald Trump launched his meme coin. So that's this over here. Most people got burnt with that meme coin. If you bought this in the first few hours after launch, you made money. If you didn't, you lost money. Since the launch, Bitcoin lost 21% of its value. Of course, the Trump token lost much more. A lot of other altcoins also lost more. And so the majority of people lose, of course, when the market looks like this. There's pretty much nobody that has their entire crypto portfolio in Maker or in Bearer or in Bitcoin Cash. Even if you hold those tokens, you probably have a diversified portfolio and you're down with all of those other tokens. Now here's something that's not so obvious. We see Bitcoin over here. Bitcoin went up by 14% in the last year. And this is now the top 100 ordered by their performance in the last year. And there are a few altcoins that did better than Bitcoin. Two of them being gold derivatives, so PaxG and Tether Gold. But there's also others that performed slightly better. But the vast majority of altcoins actually performed much, much worse. If you picked a random altcoin in the top 100 1 year ago, you've got roughly an 80% chance that you underperformed simply Bitcoin. And that's of course a problem, right? Because altcoins have more risk, and so in theory, they should also perform better, especially during times when Bitcoin tends to go up. And so I don't try to find the needle in the haystack. I don't try to pick the bearer coin in order to then make money. I do the exact opposite. I bet on the vast majority of altcoins doing worse than Bitcoin. And most of the time, that strategy makes money. Have a look look at this, for example. This is Matic relative to Bitcoin, a very constant underperformance. Or this is Balancer relative to Bitcoin. Again, a very constant underperformance. And we can make money from that relative valuation. We don't have to bet on Balancer or on Matic going down versus the US dollar. We can bet on it doing worse than Bitcoin and make money when this thing continues to go down. Or we can also mirror that chart, right? We can just bet on this continue to go up. This is now Bitcoin relative to Matic. That's the logarithmic chart. This is the linear chart. So why does this happen? The reason is tokenomics, right? It's the altcoins that print more and more tokens, and that token allocation goes to the insiders, it goes to the developers. And for meme coins, we don't necessarily have an expanding supply, but for meme coins, we tend to have a lot of ownership by the insiders as well that simply sell off over time. And that's why Bitcoin performs so well versus all of those altcoins. And that's why I believe those are the kinds of charts we want to bet on. Yes, we can of course try to time Bitcoin itself, and we can try to buy this at 16K and then sell it at 100K. And this is a possible way to make money. I'm also trying to time Bitcoin. But why would we try to pick the few altcoins that perform still okay? Why not just flip this thing around and make money when those bubbles are red? So for example, over here on the 6th of December, I have made a premium update video how I have sold some of my Bitcoin because a liquidity crunch was incoming. So that was over here. I've made another announcement on the 25th of February how I've sold all of my speculative Bitcoin and how I'm selling all of my altcoin positions. And that was over here. I opened a position betting on falling prices of Chainlink on the 23rd of January. I opened a short position on Dogecoin and on PancakeSwap on the 14th of February. And the reason why I'm sharing this is because I've now closed the Chainlink position, so it lost 42% in the span of a few weeks. I've also closed the Cake short, which went down versus BNB by 27%. And I've also closed the Dogecoin short, also in profit. So really, when you know what you're doing, if you know how to do the proper risk management, that you don't get liquidated, and when you have the odds in your favor during times like this, when most altcoins underperform Bitcoin, then it is rather straightforward to make money like this. We don't have to find the needle in the haystack. We don't have to make 100x returns with a random meme coin. We can simply just let our capital compound by making 20% here and 40% over here. Most people are scared of betting on falling prices, but that's why I've made dedicated tutorial videos on the topic, how to do the proper risk management, how to set up those positions also in DeFi and Web3, not just with centralized exchanges, how to do this cost efficiently, and also how to select the right assets to short. There's more than 100 tutorial videos in total in premium. The link is down below. It's thebitcoinstrategy.com. Of course, I'm also sharing in detail how I currently see the market. There's a premium update video every 3 to 4 days. And I challenge you to look at other influencers, what they said during those times, right? Have a look at the date, have a look at the title of those different premium update videos, and let me know who said already on February 18th that it might make sense to bet on falling prices, or that crypto stopped expanding in the last 2 to 3 weeks, or how your influencer is selling aggressively. I don't really see many other influencers saying it like it is. Most YouTube channels just sell hopium. Most YouTube channels just want to push up their own bags, but they're not really looking realistically at the prices. They're not really looking at how much are people actually already in profit and when will that profit be taken. So if you appreciate during times like this that I keep it real, then of course feel free to give this video a like. Feel free to also subscribe. I publish videos regularly. And of course, feel free to also check out Premium. The link is down below. Looking very much forward to seeing you there as well. Cheers.